2025 is shaping up to be an exciting but uncertain year in global markets. High inflation, rapid technological advancements, and the booming demand for sustainable energy are creating massive opportunities, but also challenges. How do you grow your portfolio without taking on unnecessary risks? In this step-by-step guide, I'll show you 6 high-growth ETFs poised for success in 2025. I'll break down what makes each one unique, how they add value to your investments, and how they can help you achieve financial goals, whether that's a reliable income stream or long-term portfolio growth. And stick around to the end because I'll reveal an ETF that could potentially turn a $10,000 investment into a portfolio paying over $50,000 in annual dividends. First things first, what's the big deal with ETFs? If you're new to investing, ETFs, exchange-traded funds, are your best friend. Why? They bundle multiple investments into a single package, offering instant diversification. They come with low fees, so you're not burning money on costly management charges. And they make it easy to invest in trending industries, like clean energy or AI tech, without needing an advanced finance degree. Basically, ETFs offer a simple, cost-effective way to grow your money while spreading out risk. Ready to dive in? Let's count down the top 6 ETFs for 2025, starting with number 6. 6. Schwab U.S. Dividend Equity ETF. Let's kick things off with a blend of stability, growth, and income. If you're someone who likes steady, reliable performance, this ETF is a winner. What makes SCHD special? It tracks the Dow Jones U.S. Dividend 100 Index, focusing on 100 top U.S. companies with strong financials and consistent dividend growth. You're not gambling on risky, speculative stocks. These are well-established businesses with proven records of success. Key numbers to know: dividend, yield, 3.39%, steady income stream. Dividend growth, 11.13% annually. Share price, growth, 7.95% annually. Let's do the math. Start with a $10,000 investment. After 1 year, your portfolio grows to $11,340. Fast forward to 10 years. Your investment triples to $36,950. By 30 years, your investment reaches an impressive $443,000, paying annual dividends of about $32,470 or $2,705 per month. Why it works? SCHD is all about quality over hype. It offers both capital growth and reliable dividends, perfect for building wealth. 5. Invesco S&P 500 GARP ETF. Ever heard of GARP? It stands for Growth at a Reasonable Price. And that's exactly what SPGP delivers. This ETF focuses on companies that are growing their earnings but aren't ridiculously overpriced. Why is SPGP a smart choice for 2025? The market's been a roller coaster, so investors want stability and upside potential. SPGP delivers. It finds companies with solid fundamentals, strong earnings growth, and reasonable valuations. You get diversified exposure to multiple sectors, not just tech or healthcare, so you're protected in any market environment. Key numbers to know: dividend, yield, 1.31%. Dividend growth, 11.27% annually. Share price, growth, 12.89% annually. Let's break it down. Start with a $10,000 investment. After 1 year, your portfolio grows to $11,420. In 10 years, it climbs to $37,420. By 30 years, SPGP could grow to $576,000, paying annual dividends of $3,592. SPGP gives you growth, stability, and a smooth ride in unpredictable markets. 4. First Trust, NASDAQ, Clean Edge Smart Grid Infrastructure. ETF. Clean energy isn't just the future, it's already here. Grid focuses on companies building the infrastructure for renewable energy, smart grids, and electrification. Why Grid is perfect for 2025. Governments and corporations worldwide are pouring billions into green energy initiatives. As sustainability goals ramp up, demand for clean energy solutions will soar. Key numbers to know: dividend. Yield, 1.08%. Dividend growth, 8.98% annually. Share price. Growth, 13.33% annually. Here's what that looks like. Start with $10,000. In 1 year, your portfolio grows to $11,440. In 10 years, it jumps to $37,719. By 30 years, Grid could grow to $514,390. If you believe in clean energy's future, Grid lets you invest in it profitably. 3. iShares, U.S. broker-dealers and securities exchanges. ETF. III focuses on companies driving the financial markets. Think trading platforms, brokers, and securities exchanges. It's packed with big names like Goldman Sachs, Charles Schwab, and NASDAQ. Why III is a top pick for 2025? Retail investors are becoming more active, and fintech innovations are reshaping the industry. Increased trading volume equals higher profits for these companies. Key numbers to know: dividend. Yield, 1.02%. Dividend growth, 11.87% annually. Share price. Growth, 13.81% annually. Let's calculate. Start with $10,000. In 1 year, your portfolio grows to $11,483. By 20 years, it skyrockets to $154,300. After 30 years, your investment could be worth $594,500, paying annual dividends of $3,004. 2. Global X MSCI Argentina ETF. Looking for something exciting? ARGT gives you exposure to Argentina's booming economy. While it's an emerging market with risks, it offers high growth potential in industries like agriculture, energy, and technology. Key numbers to know: dividend. Yield, 0.97%. Dividend growth, 15.24% annually. Share price. Growth, 14.06% annually. Start with $10,000. By 20 years, it grows to $167,800. After 30 years, your portfolio could reach $741,300 with annual dividends of $8,270. 1. ProShares, UltraDow. 30 ETF. Here's the big one. DDM amplifies the daily performance of the Dow Jones Industrial Average by 2 times. If the Dow goes up 1%, DDM goes up 2%. Why DDM stands out? The Dow is full of rock-solid blue-chip companies like Apple, Microsoft, and Coca-Cola. By leveraging these giants, DDM supercharges your returns. Key numbers to know: dividend yield, 0.98%. Dividend growth, 21.43% annually. Share price. Growth, 16.5% annually. With a $10,000 investment, in 10 years, it grows to $51,146. By 30 years, it reaches $1,686,820, paying annual dividends of $55,500. Imagine investing just $30 a week in ETFs like these. Over time, with compounding growth and reinvested dividends, you could build a portfolio paying over $5,000 in monthly income. Ready to start? The earlier you act, the bigger your financial snowball will grow. Now, click the video on the screen to learn the step-by-step process for maximizing your returns with ETFs.